My name is AB Ridgeway, and we are talking about feeling financially secure. What is financial freedom? For me, financial freedom is being able to live the life that you want to and do what you want to. And that's what a lot of people feel the same way. But what is that number? Is there a magic number that you can reach to actually have financial freedom? Well, I'm not going to tell you my answer, but it may not be what you think. Let's listen in and see what Americans are actually thinking about when it comes to retirement and how much you actually need to be happy.
In the bank. The latest retirement confidence survey finds 67% of workers and 78% of retirees are confident they will have enough cash to live comfortably through retirement. Yeah, that is good. But before you can call it quits at work, you need to set yourself up for success. And who do we call in when we need a little setting up for success? Jill Schlesinger, ladies and gentlemen. She is here with tips to make sure that you've got all your bases covered. Jill, so a lot of people think that they're all set. What is the difference, if there is, between what Americans think they need and what they actually need?
Well, first of all, it's very funny when I hear a stat like that because I wonder how many of these people have actually run their numbers. So we do have some data that show that people think they need $800,000 in order to be able to retire comfortably, which is completely arbitrary, gang. I don't know whether you need $1 million or $5 million or $1 because you have a great pension. And in that same survey by Charles Schwab, what was fascinating is a third of the people have no plan. So I need the money. I have no plan. I don't know what I'm doing. And so this is why we make numbers up. People will sometimes say to me like, oh, I heard you need $1 million to retire. Again, it depends on your unique circumstances.
Right. My name is AB Ridgeway, and welcome back to another episode of the Ridgeway Report. And today we are talking about how much money you actually need. And she actually said something I say in all of my videos. The amount of money that you need is arbitrary. That means that there is no set dollar amount that you're going to need in order to retire that is not unique to you. I cannot pull 1.2, 1.3, 1.5. We need to understand who you are. You are the key to understanding how much you are going to need in retirement. And also, we call this the retirement paradox, where people have this idea of what they need to retire, but there's also a gap between what they know they need and where they are. And these Americans are actually overconfident. Once again, she said, well, have you ran your numbers? How do you know this is how much that you need? And unfortunately, many of you are even listening right now that says, I should be okay. Yeah, you should be okay, or you wish that you were okay, but that doesn't mean you are going to be okay. We have not ran the numbers and we haven't understood your probability of success. Now, you may be thinking, Mr. Ridgeway, you cannot predict the future. You cannot tell me that with 1.2 or $2 million, I'm going to be successful. But you know what I can do? I can say with the probability of success of you having enough money by taking in variables like your inflation, your income, your expenses, and additional income, whether it's from rental property, Social Security, or other forms that you're going to have. Are you out of debt? What is your debt management strategy? I can say with high probability if you are going to be successful and if your money is going to last, if you sustain this lifestyle and the impacts that may occur. We have what they call a stress test here with financial advisors. I may put a definition down here at the bottom so you understand what that is. But when we have an investment portfolio, we actually put it through a stress test. And what a stress test is, it says, what if the market crashed? I'm talking about we lost 40% of the income. It was a war and everything just went to dust, right? 40%, 50% loss. What would happen? What's the probability of success? And if your probability of success is still 80%, 85%, guess what? If that never happens, you are totally okay. And guess what? Even if it does happen, you are still okay. Why? Because you know the number. So when that flashes across your screen, you are not jumping and calling me and saying, Mr. Ridgeway, what should we do? Because you already know your numbers. You've already put it through a stress test. Many people want to talk about how much money they're going to make, but nobody talks about how much they are willing to lose and the risk associated with that gain. Once again, you can't make gains without risk. So if you're out there, you have an investment portfolio, maybe it's $2-3 million, but it's never been put through a stress test, you may want to reach out for a free retirement planning consultation so we can actually look at your portfolio and say, listen, Mr. Client, in these extreme situations where you lose 40%, this is your probability of success based on the factors that we have today. Now, once again, we cannot predict the future with 100%, but I mean, how many times are we going to see a 40 or 50% decline in stock market? Maybe once in a lifetime, maybe never in a lifetime. But having that security to know that this is the furthest that it probably can go, hypothetically, that makes you feel a little bit more comfortable. That's going to give you the financial freedom to say, listen, everything else is what we call lagniappe. And put a little definition there. It's a little bit Louisiana slang for you. But let's continue with this conversation because I think it's very vital for you to understand what's going on and what number you need to live comfortably.
Right. People have future potential to take in money like Social Security if they fix it and it continues to operate and all the rest. How do they factor that into their decision?
You know, a lot of young people will ask me, should I count on Social Security? And the answer is, yes, you should. See, I'm looking at the camera, so you know that.
Oh, good.
The reason is, I think the system will exist. I don't know if benefits will be curbed or not in the future, but the best thing to do is go to ssa.gov, okay? That is the Social Security website, and you will set up a record for yourself. And the reason why this is important is the Social Security Administration website is really good in that it allows you to say, what would happen if I kept working at this job for a certain period of time? What would happen if I took less money? And it will figure out your Social Security benefit. There are 3 main ages to think about. 62 is the earliest you can claim Social Security retirement benefits. But doing so is a terrible decision because it will make your benefit go down permanently by 25% for the rest of the years that you collect Social Security. And if you have a non-working spouse who relies on that, that's bad for your spouse as well. The second age is called your full retirement age. It's generally 67 years old if you're born after 1960, and you'll get a bigger benefit for that. And if you wait 3 years longer, you can max out your retirement benefits at age 70. Every year you wait, it's about an 8% increase in your Social Security benefit. And you know the coolest thing about Social Security? It's indexed for inflation. So the longer you wait, the higher the benefit. The higher the benefit, you keep getting that cost of living increase on top of it. It's really valuable.
Wait. Slow down. Before you jump out of your seat and say, oh, yes, I knew it. I knew Social Security was going to be good. There's a couple things. She said, one, your Social Security benefits may be curbed, meaning that there may be a haircut coming 2035, but there probably are going to be some policies going to be passed to make sure that it gets funded. But there also may be some benefit cuts. Let's say that too. 62 may not be a bad idea. Some of you may have taken out at 62. And the reason is because you need the income. I mean, you lost your job, or maybe you got laid off, or you retired, or whatever it may be, and you need that income. So yes, 62, if you don't have to take it out, yeah, 62 may be a tough decision to make. Now, full retirement age, yes, you get your full retirement benefits, and that's great. But think about this as well. Think about this. Let's say that you had $5 million saved up. Do you care if you wait till 70? No. Do you care if you wait till 67? No. But if you have nothing saved and you need to pay your bills, what are you going to do at 62? You are going to reach for that Social Security money and say, I need to apply for Social Security because I need something. I don't want to starve. I don't want to move in with my kids. I don't want to be a burden on my family. So I got to take it at 62. So how do we prevent this? We actually start planning now. In another video, I said, when should you start investing? Now. 20, 30, 40, I don't care how old you are, start saving now. There are even talks about having 13-year-olds being able to invest into the stock market, because the earlier, the better. The earlier you start investing, the earlier you start working on this, the less money you're actually going to have to make in the long run, because you started so early, and that compound effect is going to build. You're going to have a better sense of financial freedom in the future. But once again, this Social Security is not as big as you think. So before, once again, you jump out of your seat and say, Social Security is going to be my golden parachute, you need to go to ssa.gov and look up your Social Security benefits, because once again, it is maxed out for a certain income. So after a certain threshold, you don't even contribute into Social Security. That's one. And two, you may not be contributing the max. So your output, based on how much you make, you may not be getting a lot of money in the first place. So if you don't make a lot of money in your job, you may not get a lot of money in Social Security. So you have to take that in consideration as well. And once again, 62 or 65 or 67, that is a personal choice. So don't feel that if you take it at 62, it's going to be horrible, because you may wait till you're 66 and then you die the next year and you didn't get any of your income either. So there is a risk associated with the years and when you make that distribution. So the best thing that you can do is make Social Security an option and not something that's mandatory. So if we have enough assets accumulated over your years, then we can say, well, when do you want to take Social Security? Well, I want to delay it another year because I want to make that 8% and adjust it for inflation. Okay, let's do that. Let's keep that money over there, and we'll make a withdrawal. We'll revisit this conversation next year, right? Those are going to be very vital. Also, maybe you're going back to work, and maybe you don't want to jeopardize how much you are making in Social Security, and you want your full Social Security benefits. That's also another conversation that we can have. So everything is going to be dependent on you. So if you're listening to this and you're thinking that's the decision you're going to make, I recommend you talk to a financial advisor. I'm a certified private wealth advisor. I've helped over 300 families, and I've been in the industry for over a decade. So this is right up my alley. I help retirees just like you plan for your retirement so you can actually have that financial freedom. If you're looking for a retirement planning consultation call, there's a link going to be in the description. Also, if you're in a situation, let me know, when did you start taking Social Security, and was it what you thought it was? Did it cover your bills? Did it cover the expenses that you had? Because what we try to do here is have Social Security cover your expenses, or the things that you have to have, and let your savings be the things that you just like to have, traveling and having fun, right? We don't want your retirement to have to be restricted to just trying to survive. And that starts by planning today, not tomorrow, not next week, not thinking it over, not talking to someone else, finding professional help now and getting it done.